Now we have more movers in the market to keep your eyes on. Joining me right now is Schwab Network's Sam Vadas taking a look at trade desk. The trade desk with a huge sell-off.
It is getting punished this morning in trade as we get up and running this morning, Nicole, and this comes off the back of its earnings report, down almost 40%, so 37% or so right now in trade at 55 bucks. So we're pretty much down to where we were last earnings report. We had seen a recovery certainly in this stock over the course of the last 3 months or so, but we are certainly back at those levels. So very much under pressure, despite the fact that these expectations were more or less in line with what the company had reported in this earnings report. As you can see here, EPS of 41 cents and estimates of 42 cents, and then revenues of $694 million versus $684.5 million, which is what the street was expecting. The company's CEO did cite the direct impact of tariffs on advertisers for the weakness, but called those impacts as short-term negative. They also announced that they would be transitioning its CFO to another role within the company over a decade in finance leadership positions with the company. So the earnings and the guidance, as I mentioned, was more or less in line, but it seems that investors were very much wanting more from this company and perhaps a few concerns around advertising, tariffs, how consumers are feeling compared to a year ago. The softer revenue growth outlook seems to be one of the culprits here, but other reasons for the pullback as well as the cautious outlook also could be, as I mentioned, the change in the leadership. There has been some suggestion the fact that this stock is maybe too expensive, but I was just speaking to one investor from 7 investors saying that this is always an expensive one. On that revenue, which seems to be what everyone's paying attention to right now, they did guide for $717 million in the current quarter, largely in line with expectations. But one analyst, I've just been reading some commentary, does point out that that implies a growth rate of 14%, which is a slowdown from the 19% growth that they saw in the previous quarter. So I do see that Jefferies has a buy rating on the stock with a price target of 100 bucks. So it does imply some upside. But as far as the leadership change is concerned, there does seem to be a case where they are going to see a bit of a shake-up on August the 21st. And no doubt this is something that many are watching as well. But, as I mentioned, I was talking to one investor who does very much seem this company is well positioned. They do say that the CEO, Jeff Green, is a good innovator, one that has independently survived a brutal digital ad industry, and thinks that the Kokai and also Open Path initiatives are the right ones, and that Trade Desk will eventually win in the ecosystem as it continues to consolidate here. So there does seem to be some thoughts that there is more room for upside here, Nicole.
And look, it never recovered from the earnings report of February 2025. There was a huge gap down, just like what we're seeing. And you mentioned the recovery that we saw from those lower levels and have come up, yes.
Yeah.
But it looks like that the earnings reports are so telling, and analysts who were bullish, like Bank of America, for example, have now turned to neutral. You have so many downgrades this morning, too. So they're falling out of love. They're not screaming that this is a huge buying opportunity.
Yeah, that's right. I mean, you can just see it on that chart there. I mean, how much of a leg lower it's taken, particularly as you mentioned, how it's not managed to climb back up to those highs that we'd seen earlier this year, even after the recovery that we saw from the previous earnings report. But the way that one investor had actually described it to me and characterized it this morning is that between the tariffs and the shaky consumer confidence, advertisers are feeling much more uncertain today than they were a year ago. And so that seems to be very much the fly in the ointment here. It seems to be that the advertising is very much the canary in the coal mine when you look at just how consumers and businesses are feeling at the moment, Nicole.
And if the tariffs are going to affect, the CEO warned that tariffs are hammering big brand advertisers, right? That's not going to be a Trade Desk story. That's going to be a Wall Street story.
Right.
So Trade Desk CEO is calling this out. But I really question now, who else is going to say the same thing? I mean, let's see if the others say that.
Yeah, you make such an interesting point, because I was also listening to Laurie Calvasino from RBC this morning, who seems to be sort of suggesting that there's this disconnect between, what corporate America's psyche is right now versus markets and investors' psyche. When you've just seen the incredible recovery in the S&P 500 off the back of, what we've heard from the earnings. But, a lot of these companies, we've been sitting here each morning talking about how they're still uncertain about the tariff impact and the outlook here.
Right.
I mean, there are some that have still held back on the guidance because they just don't have the visibility.
All right, let's do XYZ block.
Yeah.
I mean, that had some bright spots in it. Good news.
Yes, very much. Shares rising this morning. That is actually, interestingly, despite what has been a double miss. That was for the second quarter. So we do see that the upbeat reaction is coming off the back of the fact that it's Square and Cash App segments did see growth pickup, but also the guidance for the year with the CEO, Jack Dorsey, also citing the impacts from AI for what has been, quote, the super bullish outlook. So it does look like a bit of a case here with this company that investors are willing to forgive what has been a miss here when it comes to what we've seen on some of the metrics, but then also focusing now very much on the future. So it does very much seem to be thanks to the strong outlook. We know that Square is rolling out products faster, and that's in thanks part to the AI and the development there. As far as some of the commentary, we've also been hearing about a dynamic environment for the economy, that the business has shown resilience here. But as far as the stock is concerned, it's been super interesting as far as the drop that we'd seen about 3 months ago, but the momentum we've seen in the pickup more recently has been very much driven by sort of the renewed business optimism here.
Also, they said that the Square data was showing some moves in the volatility in the economy was affecting the restaurant industry. We'll probably hear a lot of that from the restaurants going forward. But I did see Goldman Sachs has a 99 target. Needham has a $100 target. So with this Cash App part of the story, which was always the thing that analysts told me they loved about Block the most.
Yeah, absolutely. I mean, the Square and the Cash App very much seeing growth. I mean, 14% growth in gross profit during the second quarter. I mean, it is showing an acceleration from what had been 9% growth in the first quarter. So that seems to be certainly where they are seeing the growth coming from, to your point, Square and Cash App segments.
All right, look at pins. I mean, by the way, I will say that XYZ had been higher, and it's well off the earlier high. So it may be good, but it wasn't as good as it was. So note that.
Yeah.
How about Pinterest? This is much lower this morning.
Yeah, so let's take a look at that one. Down 10%, so in double-digit declines there. And this is down sharply off the back of what had been a disappointing second quarter earnings. So as far as what they saw, it was a miss on the EPS at 33 cents versus the street's 34 cents. Revenue of $998.23 million, which was better than the 974.61 million that was expected there. But it also expects third quarter revenue to be between 1.03 billion to 1.05 compared with estimates of 1.02. So it does seem to be slightly better there as well, but expectations had been pretty high, certainly as the stock had jumped some 35% or so this year. So very much outperforming the S&P 500. So it does seem that investors have been very much excited. And I was listening to also the CEO talking to Jim Cramer about this, particularly around artificial intelligence. The company has been talking about how Gen Z really love the business here. They've seen over 50% of Gen Z making up the user base. International is a big opportunity there. But, this is also a story of advertising as well. Looking at the most recent earnings reports, from the Metas and the Alphabets of the world, when you talk about the ads that go into social media, there's been a lot of commentary around the fact that that had seemed strong, but the company has also pointed out that Asia-based e-commerce retailers have been pulling back on the spend in the US because of the de minimis exemption change. So this has been something that you and I have been also discussing as well. Some of these companies that have been exposed to those de minimis exemptions before, where obviously packages under $800 came in duty free. It's not the only company that's been affected by that change in policy to the de minimis exemption.
Yeah, we're going to see a lot of retailers and third-party retailers affected by things like that. For Pinterest, I really think of it as this platform. It's not really tariff exposed in the same way. I mean, it will in third-party ways, but really it's a platform where you're putting your favorite things for your home or your recipe or inspirational things that you enjoy. So it'll be interesting. It's interesting to see it fell 14% in the first trade or so. It's come off the lows, but I guess they love it a little less, or they're worried about, you talked about the advertisers, that could be one. Also just the economy, maybe someone who says, I like this, maybe they're just shopping less.
Yeah, it's like a visualization board, isn't it, Pinterest? But I do see off the back of that, we actually have seen a couple of analysts' calls reacting to this. I'm just seeing the folks over at Bank of America talking about these earnings, raising the price target to $44 now, and also over at Piper Sandler to $35. So we are seeing a reaction certainly coming in from the buy sides.
Sam Vadas, thank you. Good luck there. 3 key names today. We appreciate it.